I have a $106 per ounce target on silver, which I think we are going to hit probably from the momentum in place, maybe even this week. So if we were to just take a look at this last big consolidation in silver, we take the low, we move up to this standout reversal, this pivot high, and we come back down to this low, it's going to give us our two levels that we always follow, or that I always follow. Those two levels are the 618. That's the 61% extension. It's called the golden ratio, the Fibonacci golden ratio. If you move to that level and price has a little bit of a hiccup, which it has, we almost always go up and see price hit the one level, which is a 100% measured move. So that is at the 106. Just based on the same move, going up to the high, and this is using Fibonacci extension, and say it pulls all the way down to the 50% mark. Now we can carry that forward. So where's the next move after that? As it starts to find support and starts to move higher, you could move in. It should go to 117 and then 151.
Silver's price action is aligning with classic Fibonacci extension analysis, pointing to a potential $106 per ounce target driven by strong upside momentum. By measuring the last major consolidation, from swing low to pivot high and back, key levels emerge, including the 61.8% golden ratio extension. Once price briefly pauses at this level, it often continues toward the 100% measured move, which currently sits near $106. According to technical strategist Chris Vermeulen, if silver later pulls back toward the 50% retracement and finds support, the next bullish leg could project higher targets around $117 and even $151, reinforcing silver's long-term upside potential. Now, we present the clips from Chris Vermeulen's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
If you have FOMO and this thing's ripped up, you're like, I didn't buy it at 60, or I didn't buy it at 50, and now it's at 100. I lost money. It's a terrible mindset. You can't look at the markets that way, or you're always going to feel in pain, and you're always going to be upset, and you're always going to be chasing things. So if I scale out of positions. Now, I know enough about the markets that I know there's going to be a very big peak here at some point. I don't see the final signs just yet. I believe we're very, very close for me to start trimming off and selling some of my metals positions. But for the average trader, as you were just saying, like somebody who's watching it go up and they want to get in right now, honestly, the best thing to do, especially looking at this chart, it doesn't matter if it's silver or not, something that's gone straight up like this, you got to just wait for it to have a pullback or pause. It's got to build a new launch pad. You got to let some of this momentum burn off through sideways time on the chart or through a pullback, and then you could re-attack it. But jumping in here, at 94, sure, you might catch a move up to 130 or 120 if it spikes. But if you're that type of person who got in here with that mindset, you're also not going to sell it when it hits 120. So you're going to ride it down anyway. So it really just comes down to, you have to have a game plan. You have to not be trading based on how much am I missing and other people making without me. It's got to be like, how can I navigate this with my position and have a stable mindset of how you're going to attack it. And it really just comes down to that. Unfortunately, most people just look at the markets through the wrong lens. They let their emotions kind of take over, and it gets them on the wrong side simply because of that.
So once this feeding frenzy is over, in your words, how do we know how far it's going to drop? How do you make that analysis? Just looking at this particular chart as an example.
Yeah. So the best way to do it, I'm just going to draw a line at 106 because I think we're going to go up and hit this 106. So I'll pick that as the peak. So one of the best ways to go about this is just to use a Fibonacci retracement, meaning it's going to tell us on average the momentum, how the mindset works, the universe works. It's going to tell us where price should go. So we could take a couple different levels. This is a fairly significant standout low before it ramped up. So we go from this low, and this is going to go all the way up to the peak of 106. And so it's saying that silver should or could, a healthy pullback would be into this range. So that's $62 to $72 an ounce. If it pulls back deeper than that, it starts to do some damage to the chart, and it actually starts to put in significant overhead resistance. I won't get into that, but long story short, that is the sweet spot that if it pulls back into there and starts to stabilize and then starts to move higher, that could be a point you could get back in, because after that, it could go a whole lot higher. And just based on the same move going up to the high, and this is using Fibonacci extension, and say it pulls all the way down to the 50% mark. Now we can carry that forward. So where's the next move after that? As it starts to find support and starts to move higher, you could move in. It should go to 117 and then 151. But you don't have to suffer this, buy here, ride it up, and then watch it crash 20, 30%, and then put in all this time for it to rebuild again. You could just, I think the best thing to do here is to let it see what it does at 106 and if it blows off and reverses. But this is the sweet spot. If we, that's where it should find support if it settles back down into that space.
Silver's rapid rally is fueling FOMO among traders, but chasing price after a vertical move often leads to poor outcomes. Experienced market participants focus on mindset and strategy, not missed gains. When assets surge, they typically need to pause, consolidate, or pull back to build a new launchpad. Using Fibonacci retracements, a healthy correction from a projected $106 peak suggests potential support in the 62-72 range. Waiting for stabilization in this zone allows traders to re-enter with lower risk, clearer structure, and a disciplined plan rather than emotional decision-making. Let's get back to the interview.
Because I have a $106 per ounce target on silver, which I think we are going to hit probably from the momentum in place, really, maybe even this week. So if we were to just take a look at this last big consolidation in silver, we take the low, we move up to this standout reversal, this pivot high, and we come back down to this low, it's going to give us our two levels that we always follow, or that I always follow. Those two levels are the 618. That's the 61% extension. It's called the golden ratio, the Fibonacci golden ratio. If you move to that level and price has a little bit of a hiccup, which it has, we almost always go up and see price hit the one level, which is a 100% measured move. And so that is at the 106. So that is what I'm expecting to hit most likely this week, just based on the daily chart and the pattern here. And after that, we could see a couple of things. We could see price go ballistic and actually have a little bit more. I say a little bit more. It could have another big blow off phase. It could go up to 120, 130, huge green bars. It absolutely gets everybody into like this feeding frenzy. But then it could have a very, very sharp reversal and actually put in a peak. Right when people think it's just getting going, it could be coming to an end temporarily. And we've seen this before. Like, for example, we did a trade in silver, just a short-term extra trade. We got into silver. I can't remember exactly where it was, somewhere right in here. And we sold out right here, I think. And we also did this for similar to gold. We caught the easy move. And then once you hit that Fibonacci 100% measured move, it goes into a volatile feeding frenzy. It's unstable. You don't know if it's going to just get hammered or if it's going to spike up and chop around. And of course, we've had another long trade in the precious metal space. We're long again. But that's what I'm expecting is we're going to probably see gold and silver hit their 100% measured moves very quickly here in the next week or two. And then we could see a big blow off phase. It could go even higher. Silver have a big spike, gold. But if we do get that big spike from those levels, that to me is going to be the trigger like, hey, I might actually be looking to actually sell and trim off some of my physical metals. Because when we get into one of these scenarios, usually we get into a very, very sharp correction. And silver is a pretty scary looking chart in terms of that. What goes straight up, likes to come straight back down for at least half of that move. And so if I clear the chart, we could see silver spike up into the triple digits, and then it could easily come back down into the 60s, 50s, or even the $45 range very quickly. Now, people don't want to hear that. I'm going to take it on the chin for that, but that's what I think is going to happen. And because everybody's going to jump on me for saying, silver's about to put in a big blow off peak and probably have a sharp knee-jerk reaction, that is also a signal that most likely it's going to happen. And that's what we see whenever things get like this. Man, you can't say anything bad about the space or you get torn to shreds. If you look at the leveraged ETFs on like gold or silver or the inverse ETFs, when they start to spike in volume, it's usually a very, very good signal that that commodity is about to put in a major top, because people generally move to the leveraged plays, and a lot of times they do it right, literally 2 or 3 days just before it peaks. So it's not that I use it to trade. It's definitely something that I watch. I'm like, holy crap, here we go. It's like the masses are now putting on, call options. They're buying leveraged ETFs at massive scale, like huge volume spikes. That is a huge red flag. When everybody's putting leverage in after a ridiculously big rally and prices is gapping higher and running up, you got to be aware. I mean, if you go back and look at this silver chart, if I just go back to this previous one, look at these monthly candles. You get a gap up and then it runs higher. You get another gap up and then it runs higher. We're starting to kind of get that. We're really starting to pick up speed. And I think if we start to get another big blow off phase, it comes down to bubbles are very tough, because when something is going parabolic like this, it comes to momentum. You got to look at the short-term charts. You got to look at the volume, the sentiment. As I just mentioned, ways to do that is with the leveraged ETFs. You kind of have to be happy with a certain level and say, you know what, this is super frothy. The signs are it's going to put in a top any point. I'm going to start selling and trimming off my position. If you want to wait for a bubble to top, the problem with that is you're going to have to go through one of these. You're going to have to ride down one red bar that gives back probably half or more of your recent gains. And so bubbles, you kind of got to ease out, trim as things keep going higher and higher. Be happy with the profits and be like, I'm protecting my capital. I'm locking in gains. I don't care if people make a bit more than me. I want to protect it. I want to be smart about this. That's how I go about it. I'm not in it for the roller coaster ride. I'm in it to protect my capital, lock it in. If it goes higher without me, I'll buy it back later after it's had a multi-month or multi-year pause, and I'll buy it again later when it's ready for another 100 or 200% rally. So I don't get caught up in missing out. I don't get the FOMO with the markets. I've done it long enough. I've watched enough people blow up their accounts that FOMO doesn't bother me when it comes to precious metals or a penny stock that I love. I just let it do what it's going to do. I can buy it back when it's primed and ready for another leg higher. And if I have to pay a higher price for it later, that's fine.
Silver is approaching a critical technical zone, with momentum pointing toward a potential $106 per ounce target. Using Fibonacci analysis, the 100% measured move often marks a point where rallies become unstable and emotional trading peaks. History shows that vertical price moves in silver can trigger blow-off phases, followed by sharp corrections of 40–50%. Rising volume in leveraged ETFs and growing bullish sentiment are classic warning signs of a temporary top. Disciplined traders focus on trimming positions, protecting capital, and avoiding FOMO during parabolic market phases. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.